Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Further weakness and concerns over the US economy pressured the US dollar on Tuesday, igniting the upside for the Australian dollar, which now challenges the 60-day moving average and also posting an engulfing candle. From that, the technicals are positive, but over the last few hours, a little bit mixed though, but nevertheless, still feel there is upside potential to come, especially with the dollar index plummeting all the way to the lows in December of 105.60. The escalating trade war between the US and its key trading partners continues to rattle investors after US President Trump's 25% tariff on imports from Mexico and Canada, and along with the increase in duties on Chinese goods of 20%, which took effect on Tuesday. Looking ahead to this week, we've still got more crucial data. That is the non-farms payrolls and a speech from Fed Chair Powell, which could shape market expectations for monetary policy. So with the technicals a little bit mixed but firmer since the engulfing candle, a clear break above the level of 63.15 could pose further a threat to the bullish case and look up towards 64, which was last seen back earlier in February, or even higher up to 65 cents. So as I mentioned, the dollar index plummeted to 105.60, sent the euro higher, and now only a handful of points away from the 106, 107 target. I feel the market has potential to rally here, but be on your guard just in case we see a little bit of profit taking around the 107 area. Nevertheless, I still believe the market will hold to a bullish case, and while from there, keeping an eye on the non-farm payrolls Friday, but also not forgetting the ECB rate cut that looms by 25 basis points. The dollar yen rebounds and getting little to the side of bearishness after the break towards 148.70 appears to be a false break and posted a hammer. Nevertheless, the technicals are still weak and therefore could see anywhere from 150.60 bearish pressure and eventually see the market take a downturn. A close under 148.70 should expose the region down towards the region of 144. Sterling now only around 100 points from its objective from this inverse head and shoulders, now around that 129 to 129.5. Overall, I'm still bullish and I still expect to see that upside region claimed before any weakness. Wrapping up with commodities, still firmer after the market bulls claim the 2,900 region and now on path to maybe even take the market back to the highs seen around 2,950 or even to this year's target of $3,000 an ounce. Any weakness likely to be temporary, with support seen around 2,884 and firmer around 2,850. Wrapping up with oil, well, the market took a stab at that 66.5 level and rejected. Still feel the bulls are lurking from this bottom side of the range, and from there, eventually see the market take a step to the upside and look on towards 68 to 71 and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday pool, and I hope you enjoy the great start to the day.